Welcome everybody. In this video, we'll explore and compare share trading practices in four diverse markets: India, Australia, Japan, and Russia. Each of these countries has unique characteristics, regulations, and market dynamics that significantly impact how shares are bought, sold, and traded. We'll delve into the nuances, market structures, and key players in each region, providing valuable insights for investors and enthusiasts alike. Let's dive into the fascinating world of share trading across borders. Let us start with our home country, India. India basically has two stock exchanges, the National Stock Exchange and the Bombay Stock Exchange. Let us begin with the National Stock Exchange. The National Stock Exchange, founded in 1992, stands as India's premier stock exchange. Its groundbreaking impact lies in the introduction of electronic systems and screen based trading, which transformed the way securities are traded. The NSE offers an extensive array of financial products encompassing equities, derivatives, and bonds. Overseeing its operations is the Securities and Exchange Board of India (SEBI), the country's primary regulatory authority for the securities market. SEBI ensures transparency, fairness, and investor protection within the NSE's ecosystem. Next, let us talk about the Bombay Stock Exchange. The Bombay Stock Exchange was established in 1875 as the Native Share and Stockbrokers Association, which holds the distinction of being India's first and largest securities market. Its historical roots run deep, and it is headquartered in the bustling city of Mumbai. BAC plays a pivotal role by facilitating trading across various financial instruments, including equities, derivatives, commodities, and debt securities. Remarkably, it lists over 5,300 companies, making it one of the world's largest exchanges. Alongside global counterparts like the New York Stock Exchange, Nasdaq, London Stock Exchange Group, Japan Exchange Group, and Shanghai Stock Exchange, the Bombay Stock Exchange contributes significantly to shaping India's capital markets. Let us now talk about the key indices in share trading in India. First, let us talk about Sensex. Sensex, which is an abbreviation for Stock Exchange Sensitive Index, serves as the flagship index of the Bombay Stock Exchange (BSE). Launched in 1986, the Sensex is calculated in both Indian rupees and in US dollars. It represents the top 30 companies listed on the BSE, selected based on market capitalization. As a crucial indicator, the Sensex acts as a barometer for assessing the overall health of the Indian stock market. Notably, companies like Reliance Industries, Tata Consultancies, and HDFC Bank are integral components of the Sensex. Now, let us move on to the second key index, Nifty 50. The Nifty 50, often referred to simply as Nifty, derives its name from a blend of National Stock Exchange and 50. NSE officially coined this term on the 21st April 1996. These 50 stocks span across 12 sectors of Indian economy, including information technology, IT, financial services, consumer goods, entertainment and media, and so much more. As a comprehensive representation, the Nifty includes the top 50 companies listed on the National Stock Exchange, meticulously selected based on the market capitalization. Noteworthy constituents of the Nifty encompasses diverse sectors such as IT, banking, energy, and pharmaceuticals. Companies like Infosys, HDFC, and Reliance contribute significantly to the Nifty's dynamic composition. Let us move on to our second country, Japan. Share trading in Japan. The first stock exchange in Japan, the Tokyo Stock Exchange. The Tokyo Stock Exchange, abbreviated as Tosho, stands as the largest stock exchange in Japan. Its headquarters are nestled in the vibrant city of Tokyo. Remarkably, the TSC traces its origins back to May 15, 1878, when it was first opened to provide a market for trading newly issued government bonds. The TSC plays a crucial role by listing some of Japan's largest companies, including industry giants like Toyota, SoftBank, Keynes Corporation, Sony Corporation, and Chogai Pharmaceutical. These companies contribute significantly to Japan's economic landscape. Now, let us explore the structure of the TSE. So, basically, the TSE is composed of five sections. The main market, which includes large cap and small cap medium cap companies. There are two sections reserved for startup companies, and the last sections accessible only to professional investors. In a sense, the Tokyo Stock Exchange serves as a dynamic hub where financial forces converge, shaping Japan's corporate fortunes and investor opportunities. Let us talk about the key indices for share trading in Japan. The Nikkei 225. The Nikkei 225 represents a price weighted index composed of Japan's top 225 blue chip companies. traded on the Tokyo Stock Exchange. As a price weighted index, it reflects the average of the share prices of all the listed companies. Noteworthy constituents of the Nikkei include well known companies like Sony Corporation, Canon Incorporation, Nissan Motor Company, and Honda Motor Company. In terms of its significance, the Nikkei is equivalent to Dow Jones Industrial Average (DJIA) index in the United States. The Nikkei serves as a vital barometer for Japan's economic health and corporate performance. The second key index for share trading in Japan is the Tokyo Price Index. The Tokyo Price Index, to TOPIX, is a stock market index calculated and published by the Tokyo Stock Exchange (TSE). It tracks domestic companies listed in the exchange's first section, which comprise Japan's largest firms by market capitalization. Although investors cannot directly buy the index itself, they can invest in exchange traded funds (ETFs) like the Topix Score 30 ETF, which replicates the performance of the Topix by holding a basket of securities from the index. These ETFs provide exposure to overall Japanese market and allow investors to participate in its movements. Let us now move on to our third country, Russia. Share trading in Russia. The Moscow Stock Exchange. The Moscow Exchange, established on December 19, 2011, resulted from the merger of Moscow's two largest exchanges, the Moscow Interbank Currency Exchange (MICEX) and Russian Trading System (RTS). As Russia's premier exchange, MOEX plays a vital role in the nation's economy. It provides a platform for trading various financial instruments like equities, bonds, derivatives, foreign exchange (forex), money markets, and precious metals. The exchange calculates its primary benchmark, a capitalization weighted composite index, which reflects the performance of Russian companies. Larger companies by market capitalization carry more weight in this index, influencing its overall value. Talking about the key indices, the RTSI, Russian Trading System Index. The Russian Trading System Index (RTSI) is a significant stock index associated with the Moscow Exchange in Russia. This index comprises 50 of the most liquid stocks listed on the exchange. Calculated in real time, the RTSI denominated in dollars, making it a valuable gauge for international investors interested in Russian equities. Launched on September 1st, 1995, with a base value of 100, it includes notable companies like Aeroflot, Gazprom, Lukoil, Sberbank, and others. The RTSI provides insights into the health and trends of the Russian stock market, reflecting the performance of these key companies. Finally, we move on to our last country, Australia. The Australian Security Exchange (ASX). The Australian Security Exchange (ASX) serves as Australia's primary equity market. Its comprehensive services encompass listing, trading, clearing, settlement, and information dissemination. Additionally, the ASX operates markets for bonds, derivatives, and commodities. Regulatory oversight falls under the Australian Securities and Investment Commission (ASIC). Talking about the key indices, we have the S&P/ASX 200 index. The S&P/ASX 200 index serves as Australia's benchmark institutional investable stock market index. Its primary purpose is to measure the performance of the 200 largest index eligible stocks listed on the ASX, considering the float adjusted market capitalization. While it is part of the broader S&P/ASX family of indices published by the S&P Dow Jones, the S&P/ASX 200 is widely regarded as the main benchmark within this group. The index covers 10 sectors, including telecommunications, healthcare, and industrials. Some of the top companies listed in the S&P/ASX 200 include the Commonwealth Bank, BHP Group Limited, CSL Limited, and others. Investors closely monitor this index as a barometer of the Australian stock market's health and trends. In conclusion, our exploration of share trading across India, Australia, Japan, and Russia reveals a rich tapestry of market dynamics. Each country's unique regulatory framework, investor behavior, and economic context significantly shape how shares are traded. Whether it's the bustling stock exchanges of Mumbai, the robust financial institutions in Sydney, the technological prowess of Tokyo, or the resource driven markets of Moscow, understanding these nuances empower investors to navigate global markets effectively. Remember, no matter where you trade, knowledge and adaptability are your best allies. Thank you.